What's up guys, in today's video we're going to be digging a little bit deeper into my investment portfolio. I'll share with you guys my strategy and how I actually built my portfolio over the course of the past 3.5 years. And then finally I'll dive into some of my investment goals over the course of the next 12 to 18 months. I'm going to share with you guys every single investment account in which I currently hold, which includes everything from stocks, ETFs, bonds, as well as cryptocurrency. And I'll also share I'm going to refine my asset allocation as well as add an additional asset class to this investment portfolio at some point into the future. But before I do so guys, my name is Mitch. I post all kinds of videos on investing and the stock market. If you do enjoy content like that, hit that big red subscribe button down below as well. Drop a like on the video guys. It really helps out the channel. And with that being said, let's dive straight into it. So for those of you guys who are new to the channel, I have two core investment portfolios, one held with Vanguard and the other held with Trading212. With my Vanguard portfolio valued at £17,035 and my Trading212 portfolio valued at £15,799, making a combined total of these two investment portfolios of £32,834. Now both of these portfolios are in fact stocks and shares ISAs, with my Vanguard ISA being built between the 2017 and the end of the 2019 tax year, whereas my Trading212 investment portfolio was built during this current tax year, the 2020 to 2021. Now the reason why I clarify this is because the last thing I want is you guys to start opening 2, 3, 4 stocks and shares ISA accounts and start investing into each one of them, because the last thing I want is for HMRC to be on your backside. Now the reason why I use a stocks and shares ISA account is because you get a £20,000 per year tax-free allowance, which as of right now I've used 66% of my current tax-free allowance, depositing about £13,250 into my Trading212 account this tax year. Now being transparent with you guys, at the start of the 2020 tax year I'd planned to invest roughly about £600 per month into my Trading212 account. But with all of these additional free shares in which I've managed to gain from Trading212 and you guys using the affiliate link down in the description below, it's certainly bolstered my investment portfolio over the course of the past few months. And this has been by and large my investment strategy over the course of the past 3.5 years or so. To simply invest into the stock market on a monthly basis, also known as cost averaging your way into the stock market, or if you're an American, dollar cost averaging. Now there are a couple of benefits and drawbacks to this strategy. Typically, lump sum investing does offer a better return on investment. If I think I've built a £32,834 investment portfolio as of recording this video, with my principal being roughly £28,166 and net returns of £4,668, that is roughly a 17% return on investment, with my Trading212 portfolio, if I'm honest with you guys, really dragging down the overall returns. Now let's say in a hypothetical world I dropped that £28,000 principal back in 2017 when I first started investing into the stock market in just an S&P 500 ETF. If that was the case, I would have had a clean 55% return on investment, and that £28,166 would be worth £43,657. So that would be a net gain of £15,491 versus that of just under £5,000 in which I have today. So that is a bit of a comparison between lump sum investing versus cost averaging your way into the market. And don't get me wrong guys, there are other benefits to actually cost averaging your way into the market versus that of lump sum investing, but perhaps that's a completely new video in itself. Nonetheless, there are some clear benefits to lump sum investing into the stock market, assuming that it obviously performs very well in the years after you've invested. But obviously back in 2017 I was not in a position to drop £28,000 into the stock market, so because of that I've kind of had to gradually build the portfolio over time, and because of that returns have been pretty steady. Now let's talk about asset allocation, because I've had plenty of comments down in the comment section below saying my Trading212 investment portfolio is far too geared towards tech stocks. And to be honest guys, I somewhat agree with you, and it's certainly something that I'm going to look to change as the investment portfolio evolves over the course of the next 12 to 18 months. And for me personally as an investor, I really do need to focus on some proper asset allocation, because if I'm honest, it's not something that I've paid all that much attention to in the kind of early phases of building this portfolio. So let's take a look at my asset allocation currently and dive into the detail a little bit more. So I have a 48% allocation in diversified funds, 45% allocation in stocks, a 4% allocation into cryptocurrency, and a 3% allocation in bonds. Now there are a couple of observations in which I've made doing all the preparation for this video, but guys, be sure to let me know down in the comment section below what you think that I should do with asset allocation within this investment portfolio. If you look at most diversified investment portfolios, if we take the Ray Dalio all-weather fund as an example, they all feature some kind of bonds within their investment portfolios. But I'm 25 years old, so I should probably look to sell that kind of 3% allocation to bonds, cash in that £1,000 in which it's worth, and use that in a more slightly aggressive manner. Second observation is my cryptocurrency portfolio is small, but it's certainly on the map. Going forward, I do certainly have a little bit of a desire to increase my overall weighting of cryptocurrencies on the whole. Thirdly, the split between diversified funds and individual stocks looks pretty healthy right now, and if anything, I probably won't look to massively change the overall allocation of those two specific asset classes. So after taking all these things into consideration, here is my kind of asset allocation goal over the course of the next 12 to 18 months as this portfolio evolves. So ideally, I'd like to move towards 50% weighting to stocks, 40% to diversified funds, and 10% to cryptocurrency. Now I know that only tells you the kind of high level of the portfolio, and whilst I certainly don't have a set asset allocation for the individual stocks in which I'm currently investing into, here is what my investment portfolio looks like across the board, and again I'll make some observations on where I want to look to tweak and change things moving forwards. So first up, the diversified funds in which I have. The first one is an 80% life strategy fund held with Vanguard, and the other one is an S&P 500 ETF also held with Vanguard. Now, if I'm honest guys, I'm probably not going to contribute any more to the 80% life strategy fund in which I have, but I will more than likely continue to add every now and then, probably just periodically, investments into my S&P 500 ETF in which I have over on Trading212. The second asset class is stocks. The portfolio right now is predominantly made up of 10 core stocks, with Tesla, Amazon and Apple making up the largest chunk of the overall holdings. Then we've got a few more tech stocks with the likes of AMD being a semiconductor company, as well as Facebook being a social media conglomerate. We then have companies like General Electric and Ford, which could certainly be considered as more value stocks within the portfolio. But if I'm honest guys, these were all actually free shares in which I managed to gain, but I did decide that I did want to keep them, and that has turned out to be a pretty good decision because these two stocks are actually two of the better performing stocks within my investment portfolio currently. Next up, we've got AstraZeneca, which was a little bit of a pandemic play with the hopes that a vaccine would be rolled out, and I kind of started investing into AstraZeneca mid-2020. However, after all of the bad press in which has been seen over the course of most recent months about AstraZeneca's vaccine, the stock price really hasn't done all that much. Then finally, we've got a couple of speculative plays in the form of Palantir Technologies and Tattooed Chef, which I'm massively optimistic about over the course of the next 3 to 5 years. Now on reflection, I probably would like to add a renewable energy stock into the mix, and potentially another stock which just isn't a tech stock moving forwards. But if I'm honest guys, I'm yet to really discover what that stock is, but be sure to leave your suggestions down in the comment section below. Then finally, we have the cryptocurrency arm of my portfolio, with the portfolio being built up of a Bitcoin, Ethereum, as well as XRP. Now with Bitcoin and Ethereum both seeing all-time highs during 2021, the prices of these coins has absolutely surged, and despite the fact that it's a highly speculative and highly volatile investment, I'm probably going to look to start cost averaging my way into these coins on perhaps probably a quarterly basis. Then talking about XRP or Ripple, well, these guys have been through the ringer as of late with the SEC lawsuits which are being thrown at them left, right and center. So because of this, the overall price of XRP really is on the floor. But on the whole, my cryptocurrency investments are certainly looking solid, and if XRP managed to get away with this SEC lawsuit, then hopefully the price of that can go up too. So that's the portfolio, a full breakdown of all of the asset allocation, as well as my strategy and how I actually got there. Now in terms of moving forwards, if YouTube continues to go well, touch wood, and if you guys continue watching and supporting the channel throughout 2021, well, I'm hoping that I will potentially have the funds available to start at least looking at a potential investment property by the end of this year. I've learned a hell of a lot over the course of the past 18 months from a DIY perspective, from doing up areas of my own property, and once I have the funds in place, I would love to either get a doer-upper and then look to sell it on, or at least buy a property that I can do up up and then rent out for at least the next 5 to 10 years. But this is a really new area for me, so if anybody watching is a property investor and wouldn't mind giving me some advice, be sure to hit me up in the DMs on Instagram, which is @MitchInvesting. With that said, guys, I hope you did enjoy the video and the full breakdown of my investment portfolio and just sharing with you guys my goals for the future. If you did enjoy the video, guys, be sure to drop a like on it, subscribe to the channel if you're new around here, and with that being said, I'll see you over in the next video.